Yup. It's these times when it's difficult to run your business and be in school, right? Talk about having to juggle things around. It's Tuesday, you're alive, so let's get on with it. Let's go. Testing. Oh, weird. The mic on this is turned off. Huh. Well, anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's see about the mic here. Microphone here, good, right? Now, yesterday, microphone was called webcam. Oh, look. It's webcam source again. So I think you want me to mute the mic, which is probably why it's muted on the other one. Hang on, I really want to mute the other one. Hang on. And I'm going to sneeze. Sorry about that. Sorry about spreading the SARS. All right, so can you hear me okay? Sound is bad now. That's what you guys said yesterday. What did I change? I changed something. All right, I'll go back to this. It's not supposed to be this. What did I change the other day? I changed something somewhere. I got to go back. This is better, right? Yeah. The problem is it's technically the wrong source, but whatever. Did you notice the lag on this shot is different as well? Remember, there used to be a lag. I think there's still maybe a slight lag, but there used to be like my voice and my mouth didn't line up in this shot. I think I've gotten that better by changing some things. But whatever, hey, long days, huh? Holy smokes. Well, one of the things I'd like to do today is remind us of the normality that we have in front of us. Again, you're probably, if you got the TV running 24 hours a day, it's chaos. Everyone's talking about volatility, VIX at an all-time high. Yeah, that's true. Well, I already got it if I got it, dude. Okay. One thing about being a currency trader is I'm already quarantined. I rarely leave the house. And when I leave the house, I go in the backyard and then I come back in. So anyways, I rarely meet other people besides my family. And even then, I don't see them very often. They're upstairs or upstairs. So I'm just locked down here. Anyways, I want to go back to the normality, and I want to also reemphasize something that happened a couple of weeks ago. Okay, so that's kind of my goal today, and news and stuff about what happened last month is sort of irrelevant, so we don't have to worry too much about that. But, uh-oh. Anyways, let's go over the rules of engagement here. The idea is that we have a community of currency traders and we support each other. We treat each other with dignity and respect. Our overriding goal here is to improve our trade planning abilities and take control of our trading. We can't control the market, but we can control our behavior. And through having an intelligent, well-planned well-planned trade plans? How about well-planned strategies and tactics that we can improve the outcome of our trading? We can improve the profitability. And that's what we're here to do today, using both technical and fundamental analysis. So I will do my best to help you. Please ask intelligent questions, even dumb questions. That's fine. Don't heckle. Don't belittle other people. Don't come in and say you're the world's greatest trader and I'm an idiot. All right, I doubt you're the world's greatest trader. I might be an idiot. But anyways, if you got some negativity, check it at the door. The world's got lots of it. We don't need any of it. The other thing is, the Forex.Today YouTube community is sponsored by Traders Way, so make sure you thank them. Visit tradersway.com, open a demo account. That's the first step. If you're interested in having a broker that is developing a symbiotic relationship with you where they're trying to help you find success so that you are, if not today, one day, be an amazing client that trades successfully for years and years and years and years and years. I mean, if that's kind of firm you want to be an execution partner with, then make sure you visit tradersway.com, open that demo account. You can do things like download MT4, test out the execution speed, swaps and spreads, and you should be pretty happy. Tradersway.com. Thank you, Traders Way. And then let's get to it. All right. Okay. One of the things we talked about, it seems like 1,000 years ago. It might have been last week. So let's pick on Aussie dollar, because this is one that we did analyze. Okay. And the first sort of emergency cut by the Fed created a scenario like this. You see that candle where for one day the markets came all the way down, hit the monthly pivot, and then respected that level. So let's confirm this. Can you or should you respect key levels of support and resistance like monthly pivot points in times of duress? This does show you that you should. Okay, you should respect these levels. I'm worried you can't hear me. Hang on. This, okay, you can hear me, okay. All right. Okay, so first of all, we had this crazy duress, and the actual trade plan for bears in the month of March was sell this level and target this level. And even under duress, that pattern was fulfilled. And even through that duress, that incredible volatility of one trading day, it still respected the lines we had on our charts. And of course, the lines on our charts are created by standard operating procedures. So always remind yourself, when you believe the markets are going crazy, remind yourself that it's pretty rare when it's crazy, crazy, crazy. Also, here's another thing to think about. Inside of this duress, so let's go to maybe a 1 hour chart. I don't know if I can grab that. Okay, inside of this duress, people lost a lot of money because it did go from a high to a low to a high and down. Do you understand, like, that was one day? And people that reacted to the volatility, people that traded without fundamental or technical plans, people that didn't take control of their behavior, but only responded to the market, may have done very poorly in that period. Would everyone agree with that? That there was a high probability of failure in here? That after a drop like this in a few hours, this would have been very difficult to trade, and then this would have been very difficult to trade? Okay. Now, with all that understood and put into place, this one trading day, what was the actual outcome of this fundamental change? The markets continued to do what they were doing. Notice that the dollar got weak for one day because the Fed slashed interest rates. And what have I taught you over the years that happens to the US dollar when the Fed cuts? What have I taught you? Forget about what happened in that one day. What have I taught you in the fundamentals course? What have I taught you in the swing trading course? What have I taught you in these daily webinars? What have I taught you that seems to be counter to what you hear or learn in universities and all this kind of stuff? Because it's not normal, my point of view. My point of view is not normal. It's not in the textbook. It's the opposite. But nonetheless, this is something I taught you because it comes from my personal observations of the market. What I, if I was Ray Dalio, I'd say, well, it was one of my principles that I learned from sitting in my chair for 20 years. Dollar strength, thank you. And for one day, that was challenged by the market. But what has been the general outcome ever since then? Has my principle been mostly correct or very little correct? Because I'm trying to get you to emotionally as well as intellectually commit to the lesson. It's not about me being right. I already know I'm right. Doesn't matter. I learned this 20 years ago. Well, not quite, but I've known this for a long time. So it's not about me being right. In this 24-hour period, people lost a ton of money because they were freaking out. But what was the end result? Freaking out doesn't pay well. Okay? And inevitably, the money was shaken out of the market, and then the market continued. Okay? I'm also trying to teach you that you should stick to your bias, and if market conditions are not favorable, you don't trade. And when they are favorable, you do trade. And there's a lot going on here. Okay, there's a lot going on here. But do you understand that if you were slow and steady, you did better than if you were quick and nimble, swinging both ways like a broken gate? And I fear that some of you slipped into your old trading habits, trading the heck out of this up and down, chasing bounces and chasing pullbacks and just scattershot your trades. I fear that you may have made trades just purely out of reaction. Maybe like your old you. Up and down, down and up, buy it, sell it, buy it, buy it, buy it, buy it, sell, buy, sell, sell. Because it's easy to slip, isn't it? But if you had stuck with your fundamental bias and the long-term trend, this is actually a very good trading period for you. Stephen's like, I'm trying to slip into new habits. And that's what we're all trying to do. So congratulations to those that have heard my message over the last couple of weeks where I say, this is a test. You've been in training for weeks or months or years. This is your ultimate test. It's easy when the markets are slow and all that kind of stuff. But now you got to do the job. Okay? So this is where you step up and do the job you were trained to do. And I hope you've taken that to heart, and I hope you appreciate it. And I hope it's helped. Okay? I also asked you I guess it would have been this weekend. I asked you to spend time and ponder what your behavior is going to be like, right? Or what you want your behavior to be like. I want you to ponder. And then 2 weeks ago, I asked you to think about the characteristics of the trader you want to be. Do you guys remember that? And I said, go as far as actually drawing a picture, something you can actually see, or find a picture. Write down all the characteristics of the trader you've wanted to be in the future, and then start mimicking that now. Do you guys remember the speech where I said it only takes 22 seconds to change the actual chemistry in your brain? Through a manifestation of both your developing a mental picture, but also creating a physical action around that. How many people remember that speech from 2 weeks ago? Maybe 3 weeks ago. Does anybody remember that? Yeah. Well, here we are 2 or 3 weeks later, and now you can see the message that I was trying to share with you, because it was in this period. Right? So it comes down to, what did you do with the lesson? I hope you rose and right and met the challenge. Ed, we already have that at live.fxbootcamp.com. By the way, guys, here's just one little thing. If you've been freaking out during this period and you've shown that you don't have the skills or you don't have the discipline, you should join live.fxbootcamp.com right now and get some performance coaching. You need to learn the skills and develop the proper trading habits, and only a live coach can help you through that, with not just training videos. I mean a live coach and actual exercises. Okay? You should consider that. live.fxbootcamp.com. Okay. Good. That's how you need to be. All right. Let's take a look now. Nice. Isn't that cool? We only have 2 trade plans here. Buy it or buy it. Looks like we've done pretty well off that. Let's see. The weekly bias, the weekly plan here, or sorry, the monthly plan is this to this. Okay? That's the standard operating procedure, of course. Okay? Well, if any, right, Benjamin says he probably needs performance coaching. If anyone here today is in the performance coaching group, if you have any feedback to share that might help other people here. All right. So there's that. And then here's last week's trading plan. I guess that's only this. So here's the monthly and here's the weekly. And then you're like, well, we're the way heck up here. Yeah, well, there's not much I can do about that. Now, can you guys see the weekly trade plan? Here's this week's buy zone. And here's this week's target. Isn't that nice? So the monthly set up, 2 weeks ago the weekly set up, and then this week set up, and they all gave you buying opportunities. Okay? Notice that these typically happen pretty early in the process, right? Okay. Can you see how showing up late is not helpful? Look at this, guys. You had a trade in the first hour or two. So if you didn't trade this Sunday, for me that's Sunday around 6 o'clock, 7 o'clock. This is Sunday Asia Open. If you missed that, you may have missed a move that fulfilled the entire week. Now, every swing trader in the swing trading group has had that burned into their brain. The first hour of the first day of the new week, done for the week. You just planned your entire week in an hour, right? You can't miss that. I can tell you for a fact, every swing trader in my group knows that. 1,000% over. Actually, that I would completely disagree with that, Raj. And spreads are not huge on Sundays. Maybe for exotic pairs when liquidity is low, but for USD CAD, no. Absolutely reject that, Raj. In my humble opinion, and with all due respect. Right, Raj? But anyways, no. That's silly. And by the way, Raj, we're talking about in the first 1 or 2 or 3 hours. By then, if there was a spread issue, which there 99% of the time there wouldn't be, but if there was during this period, that would very, very quickly dissipate to normal. Yeah, well, look, I'm not saying in the first 2 minutes. I'm saying in the first 2 or 3 hours. Okay? Yeah, and that's the other one, Benjamin. Like, that's all the cost of doing business. But, yeah, your trade plan should be yielding you hundreds and pips. So if it's 8 pips wider than normal because you're the first one in, but I mean that's up to that's people's individuality, right? That's your alpha, so to speak. If you're worried about the 8 pips additional spread, okay, then worry about it. But I'm trying to show you here, guys, that over the course of 1, 2, 3, 4 hours, right? Yeah, or Brad's got it, or use an ECN and just pay the commission, right? Yeah, now Jim says right before the close, that's a bigger deal for sure. That's right? Because people are adjusting for rollover and stuff. So it really has more to do with rollover. And high yielders really jump around rollover, for sure. Oh, for sure. But that's if you're trading like the first second or the first or within a period of minutes, right? In the period of hours here, your spread would have returned to absolute total normal spread. Okay? So I'm not saying it doesn't happen. I'm just saying in time it normalizes, and that's a normal mechanics of how brokers close the books for the day and open new ones and stuff like that, and how trading changes around then for various reasons. But over the course of hours, okay, what I'm trying to tell you is if you show up in New York and you're like, hey, let's get going, you may have already missed it, right? So you need to be there. But whatever. You got it. You got it. So this moved from, let's say, 138 to 141. It's actually 141.50, but well, I'll put that then. 141.50, right? So it moved 350 pips. And this is a really standard trade. It occurred, the opportunity occurred at the exact price you wanted, at the exact time you wanted, and now has hit the exact target you wanted. Okay, that's the point I'm trying to get across. Well, actually, Raj is saying, why is Kiwi so weak, right? It's, funding currency and stuff. Well, by the way, 0.25 is now a high yielder, right? Yeah, these are just pivot points, guys. I haven't changed any template in months. But why is Aussie and Kiwi weak? Aussie and Kiwi is weak, or have been weak for years. Okay? But in more current times, they are weak from their balance of trade. Another way of saying this is these are exporting nations. Okay, they typically export to China. So Australia sends product like, let's say, natural resources, iron ore and coal in particular, to China. In exchange, China converts their currency, and by buying a whole bunch of Aussie dollar, driving up the value of the Aussie dollar, driving up inflation in the economy, driving up interest rates in the economy, but then converting their Aussie dollar, well, not actually converting, paying for their iron ore and coal. So Australia's currency goes up because the flow of product is typically from Australia to China. Right now, over the last several years since the financial crisis, the balance of trade hasn't returned to normal levels. And now with China shut down, there's no flow at all, and all that demand for Aussie has diminished because there is a very poor balance of trade. And therefore, the currency is weak. Well, that's just the difference between risk on and risk off, Raj. So Raj is like, hey, we could have a situation if China will recover quicker. Well, it's not about recover quicker, it's who got it first and when and where it'll pass first, right? So if China got it first, they'll be the first out, first in, first out. Most likely, right? So yeah, so I see the market is bearish. By market, I don't mean this currency, I mean risk on, risk off. So I'm as a macro trader, I look at things, and things on a macro level are bearish, but on a micro level, I'm considering when to be a bull. When am I going to buy deals, let's say. So, right, so I'm a macro bear, but I'm considering being a micro bull. So that would be like, when do I buy the S&P 500? And it's very close. Okay? So when am I going to buy stocks? I mean, maybe today. Maybe this week. But I'm very, very interested in buying. Even though the market is down, because it's down, I want to buy. You have to understand that. What about real estate? We talked a little bit about real estate. Well, the real estate market is tied to the real economy. Real estate, real econ, which means I'm buying the market, but real estate's not the market, it's the economy. So if people lose jobs and they can't pay rent, then cash flow falls, and idiots that develop properties that shouldn't have been built, or paid too much for properties, or have expensive loans because of maybe over leveraging, then when the real economy drops, I'm trying to erase this. There we go. Okay. When the real economy drops and cash flows drop and people are over leveraged, prices fall of the property, which means they can't refi because now they don't have enough, because the banks don't want more than 70% ownership. So prices fall, and these guys are stuck with falling rents, falling cash flows, and their costs are higher than almost everybody because they still got a mortgage from 5 years ago, and they can't refi because the value of their property has fallen because of the falling cash flow. Because you can figure out the price of the property just by doing future value of money. You know, you can value their cash flows, right? And therefore, these guys lose out. So there's a separation of market and the economy. And you got to kind of pick your places. Economy. Does that make sense? No, micro means, well, macro means global, macro, and micro means sort of individual. So micro could mean a company, it could mean a country, for example, and macro is everything, global. Okay, so anyways, so let's take a look. Let's go back and check out, before we do CAD and dollar. I mean, I just want to show you that dollar's strong across the board, and that's typically what happens when the Fed cuts interest rates. And except for one day, that's been very, very, very true. And I want you to remember this because you can say, well, I don't like the way, like, let's go back to this. You could actually say, on this day, I don't like the way this day is behaving. And then wait for market conditions to be favorable. How many people see that now? Maybe you didn't see it then, but now you can see that you could have just said, I don't like these conditions. I'm not going to risk money. And then the next day felt a lot better about the whole thing. Okay? Some people have this fear of missing out, and I think we were talking about this somewhere, that you should have no fear of missing out, because how can you miss out if you have a trade plan? Right? There should be no fear of missing out. And even if you skip this day with wild volatility, well, this is where people think they're going to get rich quick, right? And what happened? I bet you more people got poor than rich. And then what? You come back the next day and you're like, okay, I'll trade that. Okay, I'll trade that. Okay, I'll trade that. Okay, I'll trade that. Okay, I'll trade that, right? And off we go. And you're going to sell the next lower high. So I want to reinforce all these bigger picture lessons where there shouldn't be any one day out of the course of a year that is significant. It shouldn't be significantly good. It shouldn't be significantly bad. And if the market looks chaos, back up. Okay? Okay? Cool. Cool. So you miss nothing, so you should have no fear of missing out. Think of it psychologically, the message I'm trying to get across. There is no fear of missing out because you have control. If you don't like the market conditions, don't worry about it. Don't trade it today. Tomorrow, conditions will likely be a lot better. And long-term trends will continue for the long term. Okay. Cool. So let's take a look at the energy complex, and let's start there today. Sultan, don't know anything. Okay. There's never been a zero reserve requirement ratio. Unless I missed something, they haven't done that. That's a nuclear option, by the way. Right? So I don't believe something like that would happen. Is that right? They cut the reserve requirement? You said the RR to zero. No, you mean... Right, no. That's not the RR. Okay, that's the interest rate. Yeah, okay, so we've never been... Okay, but the reserve requirement ratio is still the same. Okay, but the reserve requirement that banks have with the Fed hasn't changed, and that's nuclear. You can change the interest rate, and it's very minute. You can really control, because what it's changing is actually the money supply. Okay? But the reserve requirement ratio is not finesse. That's like a sledgehammer, right? And it's very difficult to figure out the outcome for that. And that hasn't changed since I think 91 or 92. Yes, go ahead. Yeah, that's a very big deal. Slashing interest rates is just increasing money supply, which is the point of the Fed. But reserve requirement ratios changing. By the way, that happens all the time in China. So if you're in Asia, you might say, well, what's the big deal? Well, it hasn't happened in 30 years here, and that is a big deal. So when you do the math, okay. Well, I have no idea, Grind. You should probably ask them. Okay. It's part of the money multiplier formula. So everyone that's taken the fundamentals course at fxbootcamp.com knows the money multiplier is 1 over the reserve requirement ratio. Okay? So we call this RR. This is the ratio, which means there's money parked in the system that are required reserves at the Fed, plus any excess reserves. So we call this ER. Okay? And then to dumb it down, because we know these are reserves, the formula is 1 over R plus E. Okay? So instead of me just explaining it, I mean, first of all, you should know this, right? You need to take the fundamentals course, guys. You should know this. But anyways, play with the math. Let's do this. Let's do 1 let's say these two things, let's say E is 0. So now you could dumb it down. Every bank has lent out every dollar they possibly could. So 1 over R. So let's do this. Do the math and say what's 1 over 0.1? What is 1 over 0.2? What is 1 over 0.3? Okay, and do the math and see how changing the reserve requirement up and down changes the math. Okay? Cool. So anyways. Sure. No, if you have the link, go ahead and post it. Thank you, Sophie. Okay. So anyways, let's go through the energy. Let's do WTI first. Okay. Still looks down, but we are at support. Now, grind, alchemy, I think it's more for people that believe they cannot learn on a demo account alone. There are lots of people that have told me that they just can't trade a demo because it's fake. Now, I don't think that way. I traded a demo account for 2 years. So to me, it's real. But some people, it doesn't work. Okay? For some reason, that doesn't work. So they need some skin in the game, even if it's only $10 and they're trading pennies. But I have played poker games where you got a stack of pennies and quarters and people are like yelling at each other, right? They're sweating bullets. I've seen people sweat bullets by going all in, and you're like, dude, you know that's $1.75 you just pushed in, right? And it's serious. So some people just learn that way. So that's how I look at it, like $10, dude, come on. Right? But for them, that's how they work for learning. So it would be a demo account, right? Well, it's just people learn differently. That's all, Alchemy. That's all I look at it. People learn differently. They need different resources, right? They have different fears. They have different needs. There are lots of different personality types. And so if one person needs a demo account to learn on and someone else needs a $10 account, then that's fine. There's just options. Some people want an ECN account. Some people want a fixed spread account. Some people want a variable account. That's fine. It all works out to be probably the same. I can't imagine there's someone like killing it in the markets because they have an ECN account, but everyone else is stuck with a spread. Like at the end of the day, it all washes out. I mean, it's all, you're paying the same fees just in different ways. So, but whatever, to each his own. Same thing with technical analysis. You might prefer to have an oscillator on this chart. This one doesn't have one. It doesn't really matter. Whatever works for you is okay. Okay. I read a book many, many years ago, How to Judge a Fine Cigar, and by the time you're done reading it, it's like whatever tastes good to you is a fine cigar. So whatever makes you money, it's fine. Okay. All right, so let's go back to this. Obviously, we're very low. Here's the previous lowest low. So we're looking at this as plausible support. Okay. Now, can this go lower? Well, right now, all we're doing is riding the 21, right? So I imagine that's going to continue forever. It will be interesting to me, however, if for some reason it doesn't continue forever and it fades up to the 55. Now that changes my opinion. That sets us up for creating some sort of bottom, whether it's a double bottom or a higher low or inverse head and shoulders, but having the 55 in control changes my behavior. Does that make sense? So in this case, it's going to ride the 21 EMA forever. But if it stops riding the 21, that'll be important to me. Okay? Once again, here's another plug for the swing trading group. I only do it because I think you probably need it. But every swing trader knows that this OOP sets up a 4-hour 21. Is there any swing traders that can confirm this? Right on, Roger. My pleasure. Yeah. Cool. Yeah, well, good. So see how the knowledge is helpful? At the very least, the knowledge, let's say, doesn't necessarily make you money, but the knowledge certainly helps you prevent losing money, right? And over time, obviously, you can make money. But just having the knowledge you're at another level, isn't it? So one of the things we've been working on in the last couple of weeks with the swing trading group is like, what do I know? When the markets are crazy and people are freaking out because they don't have control, a swing trader backs out and says, okay, what do I know? Tell me the facts, ma'am. Just the facts, ma'am. What do I know? Where are we now? Where are we going? What's the next plan? And there's such a big difference psychologically. But anyway, so WTI should fall forever, but there will be a challenge around this 27 bucks. So it probably will happen today that you need to pay attention. So any bull that says, all right, this $25 area is just too low. I'm not saying it is. I'm saying that would be the basis of bullish thinking. We can assume that if there were bulls, that they're going to play this out. Okay, we know that because we know how bulls think. Okay? Okay? So they're going to play this like a double bottom. If there are bulls, they will play the double bottom. Now, we don't have the right pivots for that and stuff, and we don't really have the right moving average market conditions. So a bull is really going to have to pay attention here and turn this around. Okay? Now, this is where the 4 hour should kick in, because we just said the 4 hours should hold this down forever and ever and ever. But if there's a breach up to the 4 hour 21, if there's a breach of the 21 up to a 55, then that sets up another sort of reversal. So a bull is going to look, first of all, for the first move, then there'll be a second move, and then there'll be the expansion, aka wave 3. Another way of looking at it is a 1, 2, 3. You'd get the double bottom, higher high, higher low. Okay? And, right? Or a variation of this, which could still be a slight inverse head and shoulders or something. But all of this fits together on this time frame, on the higher time frame, all that kind of stuff. Okay? But, right? Now, Grinds brings up a point where this is not a technical scenario, but it might be. The underlying asset here, and of course the underlying market for this asset, is being affected by a price war. Not supply and demand. Like, this is not market equilibria shifting because of just one exogenous supply shock or one exogenous demand shock that we had earlier. But now this is a straight up price war. So as far as I'm concerned, this can fall to zero. Now, I believe the general consensus is that Saudi Arabia needs 13 bucks, right? Well, I'll put 15 bucks. They need 15 bucks. And I know Canada has wells like this too that have been producing for decades. All the investments were paid for decades ago. So, you know, yeah, well, I'm being generalized here, like not zero, but whatever. Okay. I do believe if humanity can survive, that the price of energy will drop to zero. There'll just be so much energy that it'd just be like air. But whatever. But anyway, so Saudi Arabia can still make money at 25. Okay? And Americans cannot make money at 25. And let's say most Canadian wells can't make money at 25, although there are plenty that can produce. But let's just say philosophically, Canada can't make money at 25. Russia can't make money at 25. The Americans can't make money at 25, right? Iraq and Iran and Libya and Venezuela, they can't do it at 25. So Saudi Arabia can drop it from 25 all the way down to 15, right? Kind of thing. And at some point stabilize. But my point here is we're looking at this as if there were bulls, they're going to kind of set this up technically first, right? And it might happen. However, this is not a technical market and it's not supply and demand. This is manipulation, and you should not bet on it going up. Right? Okay. Mr. Highvolt, it's not the time frame of the pivot that you play with. And of course, that's on weekly and monthlies, right? But anyways, the standard operating procedure is the weekly pivot is missed. So you either let it fall to the counter trade or you trade into the 4-hour 21 or trade off of the 4-hour 21. Okay? But you're not going to hit the central. You're not going to hit the M3. That's what that means. Cool. So pay attention to this line, guys. If we breach this level, we're completely out there, exposed to, right? Complete nomad's land. Now, have you guys been watching high yield in the United States, in particular for energy, but all high yield? So 30 days ago, high yield bonds, aka junk bonds, were paying 4%. Or another way of looking at it is if you were a fracker on the border of Oklahoma and Texas, and you were borrowing money because it cost you $1 million per well just to drill to see if you can get, right? You had to borrow the money. 30 days ago, that cost you 4% to borrow the money. It's now 10%. And Saudi Arabia loves this because not only has the cost of borrowing almost tripled, in some cases definitely has tripled, but the value of the commodity that they're trying to frack has dropped to the point where it's completely unprofitable. Prices would have to double to get back to break even. Okay? Okay. No, we can go through that. We're getting to the underlying pressures on these currencies first. Okay? Oh yes. If you loved this video so far today, guys, I'm going to jump in to do all the dollar pairs and yen pairs and stuff. But if you've enjoyed or hated what I've done so far today, would you at least click the thumbs up button? You can pick thumbs up, thumbs down, whatever, but click the thumb button. And if you're new, feel free to subscribe. I've been doing these videos for 15 years on a daily basis. You're welcome to hang around. Thank you, Nintendo. So there's that. So there's the underlying pressure. Often we look at WTI or Brent, okay, as sort of a barometer for market conditions, right? As a way to gauge where the equilibrium is between supply and demand, whether that means risk on or risk off. And we've lost that. We've lost this. This is now not fundamental, nor is it technical. Okay? This is a manipulation of the market, or even you could even, it's a little strong, but you can say the weaponization of oil. Okay? They've cornered the market, so to speak. Okay. What happens in no man's land? Well, most people get killed, Ryan. So just look at it as when things are not behaving fundamentally or technically, then the likelihood of technical analysis to work out the way you think has been diminished. Okay. It's actually not no man's land. It's nomad. Nomad. But in America, it's been bastardized so much that they say no man's land. But it's an area where only nomads roam. But whatever. We don't need accuracy in our history. Right? Who needs accuracy? We just need to know what we all know, even if we all know something that is wrong. Okay. So anyway, so let's get that to, let's do dollars, yens, and Swissies. All right. So let's go back. Let's do the buck. The buck starts here. Yeah, that's what it is. So it's a place to say it's pretty risky to be, right? Yeah, or nomad. But anyways. You know, like think of the desert. Nomads roam the desert, but no, right? But anyways, whatever. Doesn't matter. All right. Okay, let's go. Let's start with monthly. Okay. up, down. We call this sort of a full Monty. Okay. The way I look at this is you're either bearish on Brexit, or the pound is oversold, in your opinion, because you think Brexit is overhyped. So you should be one or the other. Okay? Jim, what I'm saying is it's been misused for so long by so many people that the misused way is the right way. So, like in America, they spell ketchup like it sounds, ketchup. But the actual word is catsup. But people have seen it misspelled on the label for 50 or 60 years because a company said, well, we need to spell it the way it sounds because otherwise people get confused. So we'll misspell it on purpose and spell it ketchup. And now for every American, they all can tell you for 100% fact, ketchup is with a K. But it's not. But it is now. But so anyways, whatever. All right. So let's go back to this, guys. You should be on one side of this line or the other. Oh, that's interesting, Jim. I'd like to hear that story. Okay. So, you should be on one side of this line or the other. And if you are, on the long run, you will do well. In the short run, you will go, let's say, weeks or months with opportunities or not opportunities. Okay? And you're either in a period of buying or you're in a period of selling. Each trader has their own ops. Okay? So you can go, so you can draw this any way you want. All I'm trying to say is stay with the program, right? Stay with the program. We've actually had some mediocre months and some exploding months, right? But I think if you stick to your strategy of you either like the pound or you hate the pound, on the long you'll do well. Was that right, Reb? Okay, so Kiwi is another example. We had this on balance of trade. There was a time you can see that we were hoping for a potential in recovery. I forget what we were looking at, but we said if that was going to happen, then there's a zone in here you should look for an up, and of course we never got it. Okay, and then things got worse. I think, around here is when we started hearing about China getting hit by the virus. And boom, 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 boom. Now look at this chaos in here. Look at this chaos in here. Very, very, very dangerous. Okay? And in fact, you can see how the weeklies and the monthlies are both working. It's interesting, right? I want you to note this, that both weeklies and monthlies are being used by somebody. Okay? Right? You see that? Like these are being used. If you want to think about it a different way, for algorithmic traders, They are putting these prices into their algos. So don't look the other way. Another way of saying it is, if you're trading without these prices in your brain, if you're not paying attention to weekly and monthly pivots, then you are missing a piece of the puzzle. You understand that? If you don't have this knowledge, you are missing an important piece of the puzzle. And therefore, you must acquire that knowledge because it's in the algorithms. Like, look how quickly things get moved off those price levels. They are in the algos. So if you're trading without them, you are at a disadvantage. Okay? So let's isolate the weeklies here. Look at this, crazy. So you would have had to go an entire day without trading. Okay? At some point, your risk off should be a benefit for you. Now, by the way, this is that 55 in control that often sets up an inverse head and shoulders. So, a word of caution here. You should look for a bottom because of that retracement to the 55, but don't bet on the bottom. Okay? So you're supposed to stay bearish. That's in my book from 13 years ago. It's bearish, it's just less bearish. And because it's less bearish, you're vulnerable to a change in trend. Think of the language I'm using there. You're a bear, but it's less bearish. And because it's less bearish, you are vulnerable. It doesn't say bet that this is a bottom and go long. Lots of people miss that. They love betting against a trend. They love standing in front of the freight train. I don't know why, but it's one of these common things that many people have. So the next thing to look at, if we've made a lower low off of a 55, is that there should be, that 21 should take control. Okay? Right? If it's going to remain bearish, the 21 will take control again. And so with your mind's eye, I want you to think of it this way. Let's make this thinner. La, 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 la. Okay? Another way of looking at it is that when these two moving averages are moving away from each other, like this expansion phase here, the market becomes very bearish. And then when they get closer together, there's at least some consolidation. Okay? Is there any tool that we can use to kind of highlight whether they're converging or diverging? MACD. MACD is the moving average convergence divergence indicator. That's what MACD does, guys. That's the whole point. Okay? So you go insert, Well, let's just do it this way. Let's go template standard. Okay, here's the MACD. Now, what we're asking MACD to do is say, hey, MACD, I'm interested in these two lines. I'm interested whether the 21 is moving closer to the 55 or moving away from the 55. Okay? So therefore, you open up your MACD and you look at, you change the settings, 21.55. Do you see? I'm asking MACD to say, hey MACD, let's look at the 21 and 55 over 8 periods and tell me, are the two moving averages moving closer together or away from each other? This is why, like, when people just pop a MACD on and set at default settings, most of the time they don't know what they're asking MACD for. They just say, well, MACD told me up. No, it didn't. Okay? Has anyone just learned something about MACD and how to use it properly? I've used my settings like this for over 15 years because I'm not using MACD to make decisions. I'm telling MACD to display information I might find helpful. And I need specific types of information. So I'm looking at this right now. And I can tell you two things. One, the 21 is below the 55. And two, the 21 is moving away from the 55 right now. Okay? So if you can't quite tell what's happening here, use your good friend, the MACD. Okay? Now, if this had crossed up, then that tells me the 21 is below the 55, so I'm still bearish technically. But in this scenario, the 21 is moving back toward the 55, so I might be a technical bear, but I am cautious. In fact, I'm not happy with market conditions because these two moving averages are now converging. Well, see, TBM, that's why you don't see MACD on my charts very much anymore, because I can just look and see it. But for some people, it's not that easy to see, especially if you're backed out a bit, right? Or whatever the case, right? So for some, this is just easier. You just use a tool. It's just a tool, bro. Okay? Just a tool. Now, some people like divergence. So, right, you get sort of this slight higher high, but an extreme higher high here. What this is telling me is bulls are actually exiting as we go higher. Okay. Anyways. And sometimes you can get the opposite where this is actually down while this is going up, and that's even a bigger signal. Bulls are taking profit like crazy. Carlito says, I only have 21.55 on my chart. That's cool. So like 21.55, as I say in my book, just represents market conditions. That's all. Then the 5.8 represents price action. Okay? So, for example, here's the London Open, and what my book tells you is down, 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 up, up, into the moving averages, and this is your sell. Your sell confirms the kick off the 55. And this is where you take profit, Carlito. Okay? And that you would resume the downward trend. So you're assuming it's going to move down. So this is going to end up falling a little bit in the future. It's going to look kind of like this. And this is going to look kind of like that. Okay? And what you'll do is you'll trade the next 5-8 cross down. So this will go like, and this will go like, okay? And you'll get short here. Okay? That's why I use the 5-8. The 5-8 is the trigger. Okay. Yes, 50% of the people in the webinar right now have not clicked either thumbs up or thumbs down. Would you please take 1 second and do that, please? And I'll keep going. Thank you, Anthony. Okay, so let's move to the yen pairs. Let's get off dollar pairs. Let's go yen-yen. And then we'll do my Swiss francs later. I got knocked out of my Kiwi Swiss franc yesterday for 1,600 pips. Huh? So that shows you that I locked in profit yesterday on the idea of consolidation. So it's a bummer I'm not in them anymore, but since like January 1st or something like that, Reb. But we managed it. Remember, we moved it. We locked in 200 pips, then 300, and then 500, then 800, then 1,000, right? And then yesterday I locked in 1,550 or something like that. Okay. Right? Just interesting. No, I do not, Roger. Okay. But my point, though, Roger, is I don't change the settings on MACD because the standard ones are wrong and that somehow they give me better signals. What I'm trying to say is that MACD doesn't give me signals at all. That most people are using their indicators wrong. There are no signals. There's analysis. So I adjust my MACD to tell me the information I'm looking for. It's not that, right, there's a signal or not. I simply want to know the distance between the 21 and 55 because to me, the 21.55 represents the market, and way up here, the market turned bearish. Let me do it this way. Way up here, the market turned bearish, so since then, I've been a bear. So what's the next point? What's the next magic Wayne does? Sell off the 21, sell off the 21, sell off the 21, sell off the 21. And you're like, well, Wayne, that's not magic at all. I know, right? Check this out. 5A cross down. Take profit. 5A cross down. Right? Unfortunately, that's such an amazing move, right? 5A cross down, take profit, 5A cross down, and it says stay short, stay short, stay short. Okay? If you want to do it that way. Or you just do price action. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 up. Oh my God. Right? Down, 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 down. Up, sell. Down, 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 up, stop selling. But until that happens, keep selling. Okay? So again, this looks easy, doesn't it? If it looks easy to you, then back yourself out and ask, why do you find it difficult? Don't feel upset. Don't get all emotional on me. Try to think of it intellectually. If it looks easy, but you are not doing it, then ask yourself why, and then what do you need to do to trade like it's easy? Because it can be. It's not that it's easy, but you might be doing something different. And that might be a problem. So again, 13 years ago, I wrote a book. It says, okay, this will make you bearish. Ride the 5. So imagine that there are hundreds of day trades here, or intraday trades. Okay? And they're all set off the 4-hour 21. And back in the day, the 4-hour 21 was the basis of my swing trades. Okay? So I did a scalping lesson, I don't know, 12 years ago, 10 years ago, 8 years ago. I can't remember when it was, but a long time ago, I did a lesson on scalping, right? And what I did was I was on a 1-minute chart, okay? And I think what I called it was how to scalp 100 pips or more. Pretty cool, right? Pretty good title. They're like, scalp 100 pips? What are you talking about? You're supposed to scalp 12 pips. I'm like, well, you can do 12 pips. I'll do 100 pips, to each his own. So what I did was I'd open a chart on a 1 minute, and I'd wait and wait and wait and wait and wait, and then sell on a 1-minute chart. And then manage the stop. Okay? And I would say, all right, I'm done. Five EMA. EMA. Ride the 5 EMA. And that would blow people away. They're like, because in here, it just looks like, and I'd sell here. I'm like, boom, I'm done, put my stop. And I say, I just scalped it on a 1-minute chart. I will accept no less than 100 pips on this trade. And you know, it would quickly turn to 15, 20, 30, 40, 50, and then just go, go, go. And they're like, oh my gosh. What did I actually do? I had a trade plan. Sold off the 4-hour 21. Welcome to my world. Welcome to my world. Welcome to my world. And they're like, this guy's ridiculous. I'm like, yeah, I know. I had a trade plan. Okay. Funny, right? But there's a lesson in that, I hope, for you. that you plan. Oh, but yeah, and then like I wasn't even looking at the pivots. Every swing trader on the planet knows to sell that, right? Every swing trader on the planet knows this is a counter trend. And every swing trader on the planet knows to sell it off that 21. Like, this is stupid, redonkulous if you're trained. Okay? If you're not trained, it looks like magic. But anyways, it's not magic. So here I got this trade here going. I'm short at 72. I have 550 pips locked in. I could lock in 600 pips right now. And we'll find out what happens here on the double bottom. Okay? And I'm hoping, how about this? I'm planning to allow the 21 to push us down. And you'll say, well, Wayne, the 21's here. The future 21. The future 21 is here. Okay? I look into the future. So what I see is some sort of okay? Or the double bottom kicks in. So how many pips should I give up because I'm going to ignore the double bottom because I'm praying? Okay. Jim, are you saying you remember the 1 minute scalp webinar I did like 15 years ago or whatever it was? Do you actually remember that? Were you there? Or were you commenting on something else? Yeah. Well, they're cool. Oh, Beast? Oh, probably. Probably. Yeah, the scalp one. Yeah. Well, there you go. So if you're new to the channel, guys, we're talking about gentlemen that were working with me 12, 13, 14 years ago, and I still have their respect. So give me an opportunity to earn your respect as well. I just might do it. At least I'm going to try. So instead of jumping from YouTuber to YouTuber, give me a chance, huh? Oh, with Kurt? Yeah. We're libered. Oh, I don't know if I'm the best mentor on the planet. Best looking for sure, but I don't know otherwise. Yeah, don't get me all thrown off on real estate and stuff. That pisses a lot of people off. Yeah, well, that's one of the best things about me, Jim. I love playing around with that. Huh? That's one of the best things about me, my humbleness. Yeah, yeah. One of my thoughts is to, not this year, but next year, expand even outside of Forex for you guys and make this just about making money. And then there's a part I'm also very interested in exploring is human nature. So let's go back. We did yens, we did dollars. Oh, I guess we got to do these Swissies. Okay. How can we all improve and make that an exploration that a community can take? So anyway, so imagine FX Bootcamp, but there's an FX Bootcamp for trading oil, trading gold, trading wheat and soybeans, and that kind of stuff. But also trading stocks and stock indices, trading real estate, starting businesses, raising capital from investors, and all these things that I've done over the years. It'd be nice to just consolidate it into one thing, even bigger than Forex, because I like Forex, but it's amazing that 200 people will come to this webinar that I've been doing for 15 years, and then some other idiot will just throw down some Bitcoin F-bomb every 2 minutes and have 2,000 people watching, right? So anyway, so I'm just like, Forex is great, for sure, but it doesn't have to be everything. So anyways, let's go into here. I jammed my stop yesterday because I was worried about consolidation. Okay. Okay. So yeah, my stops were here, 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 here. Remember yesterday I moved them into here, and I had like 1,600 pips. You guys remember that? I just did it yesterday. And sure enough, it popped up like this and knocked me out. Okay? And I'm still worried about that. In fact, tomorrow's sell zone is higher than today's sell zone. And that's also a red flag. So anyways, can I get a fist bump for that, guys? 1,600 pips. Okay. That's 800% ROI. My Kiwi Swiss franc trade, my Euro Turkish lira trade made 950% ROI. Right? These are trades that you and I did together that we planned weeks and weeks and weeks in advance. I made no pips on my Euro Turkish lira. I made 0 pips, but 950% return on investment. Here, this Kiwi Swiss franc, what I did was I had 2 lots, right? So 1,600 pips divided by 2, so 800% return on investment. Not bad. Right? Going back to that, so I think there's only one left, right? So this one I have 700% return on investment. And remember, the goal here was to show you that with proper trade planning, you are worth more. I have a feeling that much of your technical analysis, when you actually take the time to plan it, is that if you take the time to plan, I believe in most cases your trades are worth a lot more than what you've been allowing them. Meaning you've been happy with 50 or 100 pips and then you cash out and you cheer, woohoo, right? And you got 100 pips in your pocket, but you're out of the trade. But they've been worth many more pips than you've allowed them to be worth. So I've just been trying to challenge you to say, don't worry about today, worry about tomorrow or next week or next month, worry about the change in the cycles, enter your trades properly and let them run. They're worth more. You're doing it right, but you're picking up 100 pips on a 1,000 pip move. And God forbid you don't buy on the way up, right? Like, so that's all I've been trying to show you, that you're worth it. There you go, TBM. And why? Because you're selling CAD on falling oil and buying US dollar on Fed cuts? Like, that's textbook. It's absolutely textbook. Hey, Joel, what might have happened is maybe your credit card expired. And you've been locked up. Oops. Okay? If you used to see the videos and now you don't see the videos, that's probably what's happened. Yeah, TBM. So that's what I'm saying. And you're worth that, TBM. Everybody here is worth it. I mean, I planned it out for you guys using Norway because I want you to get off the video game idea of just trading the same thing every day and all that kind of stuff. So I'm trying to show you, like, right? I showed you Norway exports oil, right? And we haven't looked at that chart in a year or two. Suddenly I'm bringing it up and I'm showing you, well, based on all this, you would think there would be a move. That the Norwegian kroner would drop with the fall in oil and the dollar would go up eventually based on the Fed meeting. And then all you had to do was trade that. That's all you had to do. We did it in great detail. And I described the entire history of North Sea oil and the weaponization of oil by Saudi Arabia because of the incompetency of the White House under Nixon. And I talked about C-130s flying over Israel in broad daylight. Like, I really painted a detailed picture and explained how that led to North Sea oil and Alaska oil. And like, I went to some effort. And then, of course, like, and then most people don't do anything. They're just like, oh, that was funny, and they move on. Where all you had to do is follow that up with trades, and I had the charts and I showed the analysis, right? So all you had to do is follow up with that. That's all. All right. Cool. So we talked about Euro Swissy. Now, this might be interesting if Switzerland makes a radical change to their policy to try to stem this flow. You'll probably see it here on Euro Swissy. Now, do you guys remember? I talked about banks, watches, and cuckoo clocks. To try to explain the relationship between these two currencies and what each would want. So if you remember that lesson, to see a dramatic change in direction here is a very important thing to note and take and observe and maybe influence your trade planning on other pairs. Okay. Mr. High Volt, it's set, yes. It's set at the end of the day, but it adjusts throughout the day, correct. So if you needed today's sell zone, if it's here, but you need it down here, then you know you're going to need a ginormous drop in New York to pull that off. So maybe you do that and you set that up technically to say, maybe use that level now to front run the New York move today. You see that? And that's the difference between sort of a daily swing and a day trade, right? The front running part. So like a day trade happens at a very specific price, at a very specific time. You have all of this in front of you in advance. And I'd say the vast majority of day trades, you have like 8 hours to set up. Like it's so obvious, so well planned. But then there's another way of doing it, and that's not really day trading. You're front running, and it's a combination of day trading, intraday trading, and swing trading. You're using a swing trading technique to anticipate a future move, but it's not really the day trade, it's an intraday trade. So it's a little bit of a hybrid, but that can be done. Faux show. Faux show. Okay, so for example, we'll look at pound Swissy. Yeah, you could sell tomorrow's pivots to now, but that's not the day trade because there's no fade or anything, right? You're not playing the London boys because the London boys are still trading. So it's a day trade. But look how easy this is, guys. You were supposed to sell this, right? You were supposed to sell this. You were supposed to sell this. You were supposed to sell this. And people are scratching their head like, what am I supposed to do? You're like, really? Like, really? Well, as far as risk and money and all that, guys, imagine you did something like started with 10,000 bucks and you traded one mini lot. So that's a 1-to-1 ratio, but imagine how many losers you can afford to have before you blow up your trading account. I would start with something similar to that. So if you only have $1,000, you should probably trade one micro. And you'll say, well, Wayne, I'm only making 10 cents a day. Yeah, well, it's because you're broke. What are you supposed to, how is Forex supposed to take you from no money to riches? Like, that doesn't happen. Right? So you got to put in the time. So for example, 60%, whatever the exact number is, I'm not sure, but it's at least 60% of Harvard is on student loans. Did you know that? It's not a bunch of rich people running around like a country club. It used to be like that. But there are no rich people anymore in America. You got a few billionaires, but the middle class is gone, so most people are poor or worse off. So most of Harvard is on student loans. But they have a 5-year plan, maybe even 4. Let's do a 4-year. Let's make it easy for them. It's funny. Let's make it a 4-year plan. But how long will they take to pay off this student loan? Probably a 10-year plan. But the outcome from this 10-year plan is that they will be very knowledgeable, very respected, and they'll be earning a lot of money in 10 years. And by then they would have paid off their debts. Okay? So if you don't have a lot of money, that's cool, man. You're in the Harvard of Forex right now. You just need a 10-year plan for your financing. You only have $1,000 right now, but in 10 years, you can turn that into $100,000 and be way better off. But if you got to do it in the next 100 days instead of 10 years, you're screwed. Ain't going to happen, bro. You're like, man, I don't have any money. I don't have any education, but I just need a PhD and then everything will be fine. Whoa, 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 dude. Whoa. PhDs take a lot of time, a lot of effort, a lot of research. You can't just bang out a PhD quick. Sorry. Okay? But you can do it. We are all capable of a PhD as long as you got a ridiculous, sickening work ethic. Okay? So be willing to put in the time. So just start that way. Whatever you have, start with the leverage of 1-to-1. So you might have a 50-to-1 or 100-to-1. It doesn't matter. Right? Start with a 1-to-1, but understand that the leverage doesn't give you the ability to just trade big so you can get rich quick. That is a cliche. Everybody knows that's a path to bankruptcy. Okay? So then put it this way. At a 1-to-1 risk-reward ratio, at 100-to-1, you can have 100 failing trades. Cool. Hopefully, if you give yourself enough time and put enough energy into work and education and learning and gaining experience, you can't screw it up that bad. But trust me, if you want to get rich quick, just that mentality alone, you could screw it up real quick. No problem. It's easy to not be that good. It's easy to not do the work. It's easy to not be that smart. It's easy to be a degenerate gambler. It's easy. It's not difficult. It's easy to rob a bank. Okay? You don't even need a weapon half the time. It's easy to rob a bank, but it will lead you to way more problems than the amount of money they hand over to you. What if you rob a bank? How much are you going to get? 8 grand, 5 grand, 6 grand, 100,000? Dude, 100,000 is nothing. But how would you feel about 20 years in jail? For what? 6 grand? That's all your time is worth? Like, whoa, man. Whoa, whoa, whoa. Okay, so let's focus on getting you your PhD. And in 10 years, you'll be worth a lot more. If you don't have money now, in 10 years, with good experience and a real track record and real skills and real experience, you will grow your assets under management, whether it's your own money or someone else's money. And in 10 years, you will be in a very good place. You will be very, very good, happier, more in control. Okay? Okay? Right, Daniel says no one robs banks and makes smart decisions. But this is the same thing as like gambling the money away to get rich quick is also very similar to robbing a bank. If you successfully rob a bank, you will very quickly have money. But it is a path that will lead to your demise. And that's what we're talking about here. Yeah, right. At least you'll have the time to do the PhD. Yeah. Okay. So anyways, time, everybody. Time and assets under management. I want you to remind yourself that. Time. Okay? Time and AUM are the things that determine how much money you make. Move away from the idea of leverage. Right? If you are artificially jacking up your assets under management, you're going to make mistakes. You're going to make decisions that are going to cost you. And if you try to cheat time, you will always fail. Time never loses. Okay? Daniel says they just don't have the mindset or discipline, but very often people don't know. So you can't blame somebody. They just don't know. Okay? They just don't know. So I guess I'm here to share that. Okay? I have no problems with you trying to get rich. Just do it slow. Do it steady. Do it so that you have control, that it's conservative and repeatable. Okay? Conservative and repeatable. Yes, Michael Milken, for sure. Junk bonds, baby, junk bonds. So, okay, so we can pick on CAD Swissy, or what do you want to do? Aussie Swissy? By the way, let me ask you again, could you do me a favor and click either thumbs up or thumbs down? Just take the time, just a quick thumbs up or thumbs down. Okay, so we'll look at Aussie Swissy. We have this, right? Down, 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 up, up, sell. There's the resistance we had. Down, 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 up, up, sell, right? Down, 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 up, up, sell. We have this down, 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 but the up, up still happened. So this one happened faster than normal. This one's pretty normal. And between now and tomorrow, this is the sell zone if we were going to do it again. Now notice how shallow this is versus other ones. So what you're probably hoping for in New York is one more down, down. Okay? And this is what we were talking about before. You can front run tomorrow's pivots now, but it's not a day trade. Most likely, if you get this correct, this will drop a little bit and tomorrow's day trade will look like this. There'll be a fade, you'll catch it, and you'll drop it like it's hot. Yeah, Ed, instead of going to a nasty area, I know people that moved to Thailand. I know people that moved to Brazil. Like, no joke, one guy moved to the jungles of Brazil, not Sao Paulo, not Rio. He moved to some jungle town that, and his rent was something like $10 a month. And his internet access was like $20 a month. But he lived in a jungle hut. And he's like, expenses are low, man. Expenses are low. What's for dinner? Mango. Yeah. Gabra, if you are using an ECN, it won't work. So if you look at your Aussie Swissy and it says something like odd Swiss I, the I is the game changer on that. And it won't work. Sorry. Jim, you are the guy that moved to Brazil and lived in a hut? Or you remember him? Oh, you remember. Yeah, yeah. Well, Daniel, it's very likely impossible. So, anyways. Yeah, I guess we gotta right. I guess we gotta move, guys. I've taken too much of your time. I think I did another 2-hour webinar. Sorry, guys. I got sidetracked. I don't know. I like hanging with you. So thank you for being in the community and all that. Please take a moment of time to leave a comment on the videos. Okay, even if it's not today's video, just any video. This video will be posted in about 1 minute, but please leave a comment. Please, not in the chat, like on a recording, on a video, in the comments below the video, please leave a comment. Anything from write an esoteric essay on some part that you learned from today, or just say, hey bro, thanks man. Say wasabi, wasabi. Just leave a comment, okay? And what that does is it tells YouTube that you care and that this is good comment, that this is good content. Now, another reason to do this, if you document what you learned today, I believe you can go into your comments section on YouTube and search. So you might learn something today about MACD, and you'll be able to search your comments because you said, today I learned a lot about MACD. Well, 2 years from now, you should be able to go into your comments and search your comments for MACD and pull up that exact video and then go back and watch the lesson again if that's what you need. So that's another reason to document what you learned today for your own resources. Okay? So anyways, thank you for being a client to Traders Way. If you are new, please visit tradersway.com, open up a demo account, play some trades, check out the execution speed, the spreads, and the swaps, and give them an opportunity to earn your loyalty and respect. Thank you for being a subscriber to Forex.Today. YouTube should let you know every time I start a live stream or upload a video. So like this weekend, I uploaded a video, and many of you left very nice comments, and I appreciate that. And it turns out, by the way, my daughter ended up reading a lot of the nice comments that you said. She said, Daddy, I was looking through YouTube and your video popped up. And I watched it and you were down by the lake on Sunday morning. And lots of people said really nice things about you. And that was really cool. So I appreciate that. So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you for being in my life, and I will see you.